Now, everyone in this conference wants equitable, sustainable development, but we know that costs money. And this is there's this elephant in the development room. It's called the market. And by the very nature, brownfield sites are less favored because they take time, cost more money, more transaction costs, and in dealing in a competitive and changing real estate market, especially over the last 2.5 years, it really brings up a lot of other complications. So in this session, Professor Eric Sussman with UCLA, as well as our host, John Raymond with the city of Carson, both well steeped in real estate and transactions, are going to take a look at, Eric's going to take us through a bunch of educate us like light speed about the real estate markets in a very entertaining way. So the slides will be available, and if you are squinting too much on this screen, you can maybe come closer and look at this screen over here, because there might be some charts. If you like looking at charts, that screen is a good one. And so we'll be taking questions, but after Eric gives his 20 to 30-minute presentation, John will open up a discussion and take in questions after that. So Eric?
Well, good afternoon. My name is Eric Sussman. I'm a professor at UCLA's Anderson School of Management, and in my spare time, I'm the managing partner of a real estate private equity firm in Westwood. Anyway, so what I want to talk to you about is I'm going to just give a dump of data and what's going on in the real estate market and sort of what's been going on. I assume a lot of you know. Frankly, I assume a lot of you aren't watching the business news. Probably good for your mental health not to watch the business news these days. I'm trying to think if there's any good news out there. Are you getting a picture? Hi. Get my good side. Anyways, is Matt Weinfeld here, by the way? There is a former MBA student of mine at Anderson, so there's a ringer in the crowd, a former student, a heckler. He was one of my worst students, but anyways, apparently that hasn't prevented him from, attending good conferences and all that. So I'm going to just, again, give you a ton of information, sort of maybe what would be covered in my MBA course at UCLA Anderson. As I said, I've been teaching real estate, investment, and finance there almost 30 years now. I know I don't look it, but anyways. So I'm going to start out, this is literally the first thing I do in my first day of my MBA real estate elective. Matt probably remembers this. It's called my 6 Ps of real estate. So if you want to sort of think about the real estate broadly, this is my 6 Ps. It used to be 5 Ps. Actually, I added a 6th a few years ago. So I'm just going to throw these up here in the interest of time, because I have so much that I want to talk to you about. So the first thing, as try as it sounds, is I would say real estate's a people business. You think about all the people in the industry, whether it's the brokers, consultants, it's, of course, people in plan check, architects, escrow agents, title officers, lenders. It's a people business. I spend most of my day negotiating, which means yelling at people. The second P is the project. So what project are you talking about? Obviously, the one that's on most people's minds, of course, these days is housing. And I have given so many talks on, I call the 3 H's. It's usually the haves and the have-nots. I call the haves the have-nots, and sadly, of course, the homeless. The other 3 H's I talk about are housing, housing affordability, and the homeless. Obviously very sobering. But obviously at UCLA Anderson, we talk about every property type, whether it's office, retail, industrial, self-storage, hospitality, you name it, we talk about it. And I'm happy to answer any questions that you have about any of those segments. The hottest performing segments the last 10 to 15 years have been housing, industrial. So industrial has been just on fire almost anywhere you look, the Amazoning of America, basically. And the third is self-storage. Americans just like to save crap. It doesn't matter, and we'll pay anything. And we're so good at it, they've created a TV show about it. It's unbelievable, like Storage Wars. Anyways, the third P I talk about is the process. That's the hardest part as a teacher, because look, everyone in this room, I assume, has bought a home and a condo, or maybe multiple times, and so you've been through that process, right? You know what escrow is. When I'm talking to students and I say, "Oh, you're in escrow," like, we're in it. I don't know what it is exactly, but what happens during this whole process? I mean, think about your smartphones, right? And in markets that are volatile like today. I don't know how many of you play the stock market. I hope none of you play cryptocurrencies. Please tell me none of you trade cryptocurrencies. Okay, oh God. Okay, Vegas is just a 4.5-hour drive away. So give up the cryptos and hit the craps tables. Your odds are better. And you get free drinks, so it's better. But you stop and think about the ability from your smartphones. You can literally move millions of dollars in 10 seconds or less, in milliseconds. In fact, if you look at like the online brokerages, they'll guarantee they execute your trade in milliseconds, which is just ridiculous. Most of us in this room, I think, remember when you wanted to call your broker? Remember? Hang on, ready? Let's go back to the 80s. Ready? Sell everything, right? Okay. Now you can move things in a heartbeat. But real estate hasn't changed. At least if you want to take ownership in a real estate asset, the fastest you can do it, well, single-family homes for institutions can do it quickly. But most of us, in our business, it's 2 months. If you're buying a hotel, I mean, which we don't play in that sandbox, we're talking 6 months, 5 to 6 months. So what are you doing during those months of time? You tell me. What are y'all doing during the months of time, 30 days even when you're buying your single-family home? What's happening? What's happening? Well, you're in escrow, sure. What are you doing? Due diligence, right? You're doing due diligence, you're doing your inspections, all that stuff. You're applying for your loan and all that paperwork. There's the third P is process. The fourth P is what I call the panorama, which is macroeconomic data. Look, I don't know how many of you are interested in macroeconomics, but the reality is everything affects real estate, everything. I spend a lot of my time talking about demographics, all right? Population shifts from the coast inland, the hottest. Okay, again, I got another trivia. I'm big on trivia. 2 hottest residential markets last year. 2 hottest single-family residential markets. Any guesses? Phoenix is a good guess. Boise. Someone said Boise. Boise. Fresno. Yeah, I know. Usually the words Fresno and hot are not in the same sentence unless you're talking about the weather. Okay. Right. Somebody said Phoenix. I'll give you data on Phoenix. Median home price in Phoenix before the financial crisis, so back to 2007, 15 years ago, $230,000 plus or minus. Anyone know the median home price today in Phoenix? Median. Getting closer, right, 450. But here's the thing. The change from the 230 to the 450, almost all of that happened in the last 36 months. If you look at like the 10 years after the financial crisis, Phoenix did well, but like just up with normal kind of housing price increases, and it just caught on fire the last few years, all right? So you think about what's driving that. Obviously, demographic changes, obviously, but even things that I talk a lot about now, just not only moving from the coast, I call that, because I get my wonkish academic side on, I call it reverse manifest destiny. I don't know if you remember manifest destiny from your high school history classes, go west and all that kind of stuff. Well, now they're going into the Southwest and into the Sun Belt. So you think about New York City. By the way, trivia time. New York and California, and you're all Californians, have lost population in each of the last 10 years, okay? So where are they going? All right, they're going from Boise to Reno to Vegas, Phoenix, into Texas, and so forth. And from New York, they're going into Charlotte and Nashville and Atlanta, and those have been the hot markets. All right, so you've got to stay on top of this stuff. And so I spent a lot of time thinking about things like fertility rates. Fertility rates in the United States, 2.1 children per couple now. Big issue in terms of thinking about the future of housing. They're still having problems. I'll just do this from the top of my head. I've done this plenty of times, so I'm in good shape. The fifth P is what I call public policy, okay? And that's where I think interested a lot of you. When I started teaching at Anderson again in '95, it was all modeling and all the MBAs, they want to do spreadsheeting and returns and all that kind of stuff. It became very clear to me probably 10 years in that I needed to spend a lot more time talking about public policy, the intersection of regulations, policy, and private real estate markets. All right, look, any of y'all, well, I'll ask y'all, any of you see John Oliver on Sunday night? Anyone? Okay, so you saw it. So what did he talk about? Housing. He did 22 minutes on housing. Okay, word of advice. Comedians should not talk about housing. Okay, I just think it's a bad combination. And he had a lot of things, I thought I had issue with and all that, but look, he talked about rent control. I mean, for John Oliver, where he stands, he was saying we need expansive rent control and rent stabilization. Everyone recognizes housing affordability is an issue. You'd have to be living under a freaking rock not to recognize it, appreciate it. And those of you who have kids and nieces and nephews, I mean, they're anxious about housing. My students are anxious about it. The problem is a lot of the public policies that are passed don't work. Okay? So I happen to agree with John Oliver that housing should be a right. Okay? In the United States, it's not. What's the waiting time for Section 8? Years. It's decades in some cases. I hate to say it's a joke, but it kind of is. It's embarrassingly bad, and yet it's a good program. But because housing is not a federal entitlement, it's sort of, how much gets funded and how many vouchers are available and all of that, all right? But here's the thing about vouchers in Section 8. Those programs work generally. Why? Because they're economic carrots, right? Carrots work better than sticks, all right? And that's one, look, economists, whether it's UCLA or even my good friends at USC, they are going to kick our butts in football this year. They had to bring in Ringer from Oklahoma, cheaters. Anyways, you think about economists, and there's an old joke that you should take every economist and cut off one of their hands, and that sounds harsh, because they always say, on the other hand. They always have a counter-argument. The funny thing is, economists pretty much universally agree that rent control itself doesn't work for any number of reasons, like price controls. Yet we all recognize that we need more housing and housing affordability. So I have been lecturing a lot. I believe in Section 8. I believe it should be right, and we expand that program. All right? It's not easy. There are a lot of other challenges with respect to that, but anyways, for those of you who want to check out John Oliver, he did his spiel. He talked very little about supply, by the way. That was his biggest problem. He talked mostly about, again, it's easy target greedy landlords. And yes, there is that. It's capitalism to some degree, right? I mean, that's the problem fundamentally, is of course, landlords are no different than Apple or Walmart. They're going to try to extract as much profits as they can. All right, so public policy is super important to keep in mind. I have no doubt that rent control is going to be expanded in lots of states, including red and purple ones. Those that are so quick to criticize governmental intervention into programs, trust me, rent control and sort of efforts to stabilize rents are coming in those markets. The last P of real estate we got to talk about are projections. And I'm not going to bore you with all of that, but look, for those of you who are interested in real estate, of course, it's a longer term view. It's not like you're trading Bitcoin or something like that. All right, so what are the biggest questions right now? Economically? Probably the biggest question right now are probably two, maybe three. One is inflation. I mean, that is the biggest issue. And look, here's the reality. There are a few of you who are old enough to remember the 70s. I'm looking around the room. There's an old joke that if you lived through the 70s, you wouldn't remember it anyway. Maybe you don't want to remember the 70s for any reason. But, for those of us who remember the 70s, all right, trivia time. Let's go back in time, because right now the Federal Reserve and Jerome Powell, the chair of the Fed, is actually facing a very similar situation that Paul Volcker, who was chairperson of the Fed back in the late Carter and early Reagan years. Anyone know how high the federal funds rate, interest rates got in 1981? Give me a guess. 19%. 19! So you all think interest rates, where are mortgages now? 6-ish? It's nuts. I mean, I have advertisements of home loans for 15% from the early 80s. That's how crazy things were. Now, how did Paul Volcker respond? Well, he raised rates like crazy. He just raised rates to try to, slow the economy down, and he really did. The Fed, having raised rates last week, 0.75%, is very high increase, and he's going to do it again in July to try to deal with inflation. So inflation, of course, 8.6% last month, year over year. That's the highest rate in 40 years. And look, my students and many of you, okay, and no disrespect, but those of you, let's say, under 40 or 45, that's foreign to you. Because you have lived, God bless, in an era, decades of low inflation. I mean, really low inflation. All right, another trivia time. Anyone want to guess, what was the average mortgage rate last year? Average mortgage rate in 2021? Single family home. Yeah, 2.96%, exactly. Good, yeah, 3%. Stop and think for a second. Just, again, step back. And again, it's maybe hard for us to imagine, especially those of us with a little more gray hair, but less than 3% on a 30-year fixed rate mortgage. It's unbelievable. All right, and now where are we at? 6. All right, doubling in less than 6 months. Fastest, most significant and fastest increase in interest rates in history. Biggest, what's called drawdown, loss in bonds. Those of you who have any bonds, losses in value in history. All right, just so sharp, it's unprecedented. So how does the Fed respond? High rates, which means the next question is, are we going to have a recession? So that's the big question. How bad are things going to get? All right, I have at least, I'm probably a little more optimistic than a lot of economists. On the other hand, stop. They're up now. Are we going to have a recession? Look, I think that's kind of a silly question in a certain sense because, look, recession technically is defined as 2 consecutive quarters where the economy actually declines. Okay, that's the textbook definition. Okay, whether we actually hit a recession or not this year or in the first quarter of 2023, to me is a moot point. We are going to have a significant slowdown in the economy. That's here, that's everywhere, by the way. And we're not alone. Okay, you think the United States is having tough, you think our inflation's high? All right, another trivia time. Name the country with the highest inflation right now. Good, outstanding. Turkey, someone's a UCLA graduate. Turkey, all right, smart ass. No, just kidding. How high? I don't know. Okay, I know, so over 70%. So you think we're in bad shape, right. So look, it's a global phenomenon. Things with housing are global. You think, again, our housing market is overheated? Go north of the border. Canada, if you have any friends up there, it's even more heated up there. It's absolutely nuts. But are we going to have a recession? I don't think we are. I think because there's so much pent-up demand, a lot of liquidity on the sidelines and whatnot. Here we go. So anyways, all right. Again, forgive me, I got sidetracked, my slides weren't up. So you can kind of see some of the issues we're dealing with. Most of the news out there is not good. Last year was an amazing year. Actually, 2021 in the economy and broadly was a phenomenal year. Everything went up. Housing prices up 20% across the country. In fact, another data point for you that you might find interesting, last year, 2021, was the first time in US history where every single housing market had higher prices. Not a single market that's tracked had housing prices drop last year. That had never happened before, all right? Rents, residential rents, same thing, 20%. And again, it's creating all of these problems, obviously. Everywhere else you looked, stock prices up high, commodity prices. I don't know if any of you are, play in that market. Obviously, there's a big impact on real estate, of course, because so many commodities are part of construction and development. But again, it was an incredible year. 2022 is quite the opposite. So we are in a bear market now. I know. I mean, what's the definition of bear market? That's when the market falls 20%. So the NASDAQ right now, the tech stocks down 30%. Okay. So we're in a bear market. But I just want to, again, and forgive me, I sort of just have stream of consciousness a little after teaching all these years. One piece of advice, I beg of you, don't try to trade the trends, all right? That is one thing the academics, again, also agree on. You cannot time markets. You just can't. In fact, okay, more on data. How was 2009 as an investing year? 2009, go back in your hot tub time machines. My favorite time machine, the hot tub time machine. How'd the markets do in 2009? Not 2009. Terrible, actually. Terrible, actually. The S&P 5, again, this is where, again, we forget. This is what's, yeah, Ignacio, do you know what the hell you're talking about? I thought this table was my star table, with the turkey answer. So now you're back at, you're now at a C. You were at an A. Oh, jeez. 2009, the S&P 500 fell 40%. And it is amazing is you don't even remember, okay? Because you know why? What happened in 2010? It went up 40%. It literally did the exact opposite. And I guarantee if those of you who were around and investing, which is a number of you, if I'd asked you in 2009, towards the end of the year, how you thought 2010 was going to be, I assume not everybody, I don't care, the pundits or Kramer or whoever, would say, oh, it's going to be a tough year. Wrong, okay? So look, markets are down 30%, NASDAQ, the S&P down like 21 or something. It's not good, I mean, it's sobering, but if you think that means 2023 is going to be lousy, forget it, okay? So do me a favor, don't try to time markets. Mortgage rates, you know, again, roughly 6% now. Again, doubling. Everything has doubled within 6 months, which is just record changes for sure. And you can see some of the other things that are pretty sobering. I mean, you look at, like, of course, Russia, Ukraine. You talk about COVID. You talk about China and Taiwan. So we have geopolitical issues. Obviously, inflation. The Great Resignation. The job markets are, while unemployment is at 3.6%, some of you know very well, it's hard to find staff, and it's really a very tricky thing. Attracting, retaining talent, very tricky. All right, I got to rock and roll. I got too much to talk about. I mentioned a few of these already. Things that are affecting real estate. I mentioned demographics, obviously. I call the 3 A's, by the way. As a teacher, I have all these, frameworks I have to. Otherwise, students won't remember stuff. But I call the 3 A's: automation, artificial intelligence, and Amazon. Okay, those are also broad trends affecting everything, from housing to industrial to everything in real estate. I said the public sector. So in California, as you know, we no longer have traditional R1 zoning now, so you can add on up to 4 units on any lot that's zoned R1, at least under California law. The problem, practically speaking, is you still have to find a contractor, subcontractor, money, and get your permits. And unfortunately, that isn't happening. In Los Angeles here, we had the ADUs, right? I don't know if any of you have looked into that, alternative dwelling units, right? To add on, like, they call them, granny flats, I guess is what they call them. Again, in theory, sounds great, but again, if any of you have tried to do it, it's much more challenging. And just getting permits is taking 9 months or more. Under the law, it was supposed to be 30 days. They were supposed to give you your ADU permit in 30 days. It ain't happening. Of course, they're blaming COVID, partly true, but it's a human staffing issue for sure. Other points in here, the 4th bullet point, really important, the institutional purchases of single-family homes. That's another thing that's relatively new since the financial crisis. Very controversial, that Wall Street is coming with their money and keeping families out of buying homes. There is no doubt that in certain markets like Phoenix, like Vegas, like Reno, like Atlanta, those are very big markets for these institutions, they have absolutely bid up the price of homes. No question, and we can't compete. We can't. They come in with all cash. They'll close within 7 days. Some of them will close in 3 days. All cash, just boom, boom, boom. How do you compete? Now, again, a lot of my friends on the left will say that's just wrong, that's terrible, we're ruining the fabric of neighborhoods, and I can appreciate that perspective. Those on the right, of course, say it's capitalism, get over it, right? Hey, it's tough. Maybe as a teacher, I'm always trying to bridge the differences. At least I try very hard to do that. I see a more nuanced perspective, which is I'm not thrilled with Wall Street buying houses. I think it does create some challenges and problems, which I think you can appreciate. At the same time, though, I think the arguments that you're just ruining the fabric of neighborhoods is an overstatement. I think it's a little exaggeration because, in theory, what is Wall Street doing with those homes? They are then renting them out. So they call BTR, build to rent, buy to rent. Okay, so they're renting homes. But who are they renting to? Presumably, hopefully, a family that actually may not even be able to afford the home to buy because of the large down payments and now increase in rates. So I think you can make an economic argument that it's a mixed bag. Just the rhetoric on both sides may be a little bit heated, but it doesn't even matter. It's here to stay, and any attempts to regulate it will fall flat. They're unconstitutional. LA City Council was talking about not allowing institutions to buy homes. There's no way that could stand. Unfortunately, it's just not going to. I can understand the concern and constituents' concerns, but it ain't going to happen. Political squid games. Oh, I could talk about politics for hours. Maybe we should have squid games for politics. That'd be cool. Elections by squid game. We'd all watch. I mean, we'd all participate. It'd be amazing. The other thing, a couple of points I'll just give you some color on again, I know I'm not going to get through all my slides. Is the last few months have definitely seen a popping of the speculation balloon. So that's cryptocurrencies. I don't know if any of you have heard of SPACs, S-P-A-C-S, these special purpose companies again. What else? Meme stocks, the meme stocks, AMC and GameStop, all right, those have all popped, all right? One piece of advice, again, as I'm just getting my rambling habit, is when Wall Street has a newfangled security, an acronym, run. When Wall Street creates an acronym, it's usually bad for us, okay? And don't invest in them, that's my advice. And then the last point here, which is a key driver, of course, I mentioned the 3 I's. One thing COVID has done for sure is created, I think, some definite tailwinds to onshoring. A lot of people, especially my students, of course, are concerned about outsourcing of jobs, of course, to foreign countries, whether they're blue collar, which has already kind of happened, and now maybe white collar. But I actually think if there's anything good, and it's arguable that anything good is COVID related, but the recognition that supply chains matter, that the outsourcing key production needs to foreign countries is not a good idea in some cases, and I think that will result in some more jobs here, actually. With automation and artificial intelligence, I think that'll bring the cost of the United States competitively down too, which is probably maybe a good thing as far as that goes. All right, well, sure. You all know Cleo? I was shocked to learn she was neither Jamaican or a psychic. That was shocking. And I just was shocked at that. Anyway, so just a few slides I'll give you, and then I don't know, John, what's our time? You'll tell me when I got to shut up. This is, again, a rainbow chart of just housing prices and rents. So you don't have to take from this other than every single market, everywhere you look is up. One thing to keep in mind, even some housing data came out today, I read it was either the LA Times or Wall Street Journal, is the lag. Real estate has a lag. Unlike the stock market where we can all look on our phones and see what Apple is trading at right now, I mean, literally after hours in real time, if I asked you how much your homes are worth, you'd have to sort of estimate it. You'd say, well, I think it's worth this, all right? The data we get in real estate actually is anywhere from 30 to 90 days old, because you have to get the data from escrows and that sort of thing. There isn't like a market. So just be aware of that too. When someone says that prices in real estate are up, it's probably from last month or even, y'all, have you heard of Case-Shiller? The Case-Shiller Index, It's the housing index, 90 days old. So people don't know that. You get the data, but it's from, March. And if you're an investor or an economist, March nowadays, that's like, ancient history. So just be aware of that. So the data we're still getting in housing is still really positive. But given the rise in rates and everything else, you're going to start seeing that come down for sure. Again, I mentioned everywhere. You look hot. There's Boise. There's beautiful Boise right there. Look at that. Last year, up 72%. Is that just crazy? And, okay, so those of you who said Phoenix, you losers, only 50% last year. And here you thought you knew your stuff. Right? I mean, look at these numbers. I mean, just right. I mean, just unbelievable for sure. This is, again, a lot of eye chart. And by the way, you're more than welcome to have my slides. As a teacher, I believe in open sourcing, so I'll make sure you have access to my slide deck and all that. If you do plagiarize, then just say my name somewhere or something. Again, this is just the mortgage data. And just to show you how crazy it's been, so at the end of the year, you can see the 30-year fixed rates were about 3%. By the end of the first quarter, so the end of March, they'd gone about 4.7%. Okay, so that was at the end of March. And now, y'all know, we're 6 and higher. I mean, it depends on where you look. So just absolutely nuts. All right, there's no way on God's green earth I can get through all this, but just food for thought. Again, and you'll have these slides if you want them. The things, you're thinking about housing, you're thinking about drivers of housing values, it's everything. Everything affects real estate. Gas prices, student debt levels. You fill in the blanks with any data you want. It affects real estate prices. One panel, actually, one of the most interesting panels I was ever on, and again, as a teacher, you're on all the panels, and you meet some very, very intelligent people. He was a CEO of a home builder, and someone asked him a really intelligent question from the audience. What is the single most relevant economic factor that firm, I think it was Toll Brothers, looks at to gauge housing? And it wasn't anything I thought of, mortgage rates, unemployment rate, or whatever. What do y'all think? He said the number one factor of housing prices, and whether you're in a bull market or a bear market in housing. Consumer confidence. So the University of Michigan, Big Blue, actually does publish every month literally a survey of consumers, and they ask you basically, how do you feel? How do you feel about the economy? Are you going to spend more at the holidays this year, you think, or less? And they create an index from that. The Consumer Confidence Index is at an all-time low right now, 50, okay? Sharp drops. So how you think about that in the calculus of housing, I'll leave to your thinking and all that. But anything else on this list you want to mention? Anything else? Everything. It's an unbelievable list. Yeah, number 6 or 7, children living with their parents. How many of you have 20-somethings living under your roof? Yeah, yeah. The good news is our middle daughter, our 24-year-old, finally got the hell out. Yeah. Off the dole. Yeah. So I just have one left on the dole. So that's the big thing as a parent when you finally get them off the dole.
It's like getting a pay raise, right?
Huh?
It's like getting a pay raise.
It is. It is. Like I said to my wife, we can get truffles oil now on the pizza. Not truffles, the oil. Okay, just to be clear about that. You're right, but it's amazing right now. And again, the data is a little hard to come by, but there are more 20 to 35-year-olds living under their parents' roof than ever. Somewhere it's between 2.5 and 3.5 million 20 to 35-year-olds. All right, I think again, I don't know how y'all think about that. Actually, to me, if you look around the world in housing, multiple generations under one roof is the norm. Okay, that's normal. The United States, and again, and forgive me, I can talk for so long, I'd love to say to you all, is we got it totally wrong with housing anyways. The whole idea of, again, and I hope I don't want to be offensive, like the American dream. What is the American dream? We even call it the American dream of owning a home, with a 3-car garage, and it's, 3 bedrooms, 2 baths, 3,000 square feet. If you look around the rest of the world, nobody lives like that. Even, again, very developed, wealthy countries don't live like that. And now we screwed it up because, especially Southern California, we have low density, we have all these large houses, and we need more housing, and now we just can't build it. We screwed it up. What do you do now? Which is a real problem from a public policy standpoint. All right. The biggest issue, by the way, about housing is supply. All right, look, the demand part is softening, no question, okay? Higher rates and the rest of it. The biggest problem in housing is supply, is the inability to build, all right? And yes, I'll tell you my views. It involves a lot of different things. Of course, shortage of labor, of course, and contractors, lack of buildable lots. Yes, NIMBYism and opposition to housing. And the classic is, look, we're all a little bit hypocritical. My friends of Venice, very blue community here, Venice, when a proposal came up for a homeless shelter in Venice, what did they do? They voted it down. And why? Because the reasons were, you can say, well, people were afraid of the, issues in their neighborhoods and the effect of their housing values and the rest of it, which goes to show you, and that kind of pointed out maybe some hypocrisy on that side of things. But supply is the problem. And that is basically fixed. We have been short, according to Fannie and Freddie, about 4 million housing units a year for a decade. If this chart behind me, if you look at the left, that's the financial crisis. We still aren't even near building housing that we built 15 years ago, okay? So again, you don't have to be an MBA from Anderson to know that that's problematic, all right? Now then the big question for all of us is to think about what do we do now? How do we, if we need more housing and affordable housing, which is part of, again, John Oliver's big thing, you can't just snap your fingers and build it. It doesn't work that way. We've got to think about a lot of things, whether it's changing the zoning. Yes, Gavin Newsom certainly wants to centralize that process, allow for greater density, compensate those whose homes would be affected by greater density, if we're going to allow people to build high-rise housing. And I have some thoughts on that, maybe for another day. We can talk about it. A couple of data points I'll give you, and then I don't know how you want to do this, John. We can open it up, is there's a lot of money out there. So that's another thing why I would tell you, do not try to time the markets. I beg of you, all right? You can't do it. And right now, just, again, there's a lot of data here, a lot of graphs here. I'll just tell you, there's more money on the sidelines than ever in history. So again, if you, I don't know how you took an economics class back in college. You probably got the hell out as fast as you could. But I don't remember M2 money supply. M2 money supply is the measure of basically checking, savings, money markets. It's your money you had in the bank. $22 trillion right now in that supply, record highs. That's that middle graph. Partly due to the government's largesse during COVID and everything else, but there's a ton of money. You look at corporate balance sheets, the tech companies, record levels of cash and marketable securities. Apple, Google, fill in the blanks. Tons of money. And here's the thing, you mark my words. I don't know when the market's gonna turn. That I don't know, but when it turns, you mark my words, it's gonna be fast, and you will have missed it. Okay? Because you can't time it. That money will come back in. Look, all the sales. Where'd all this money come from? The crash in crypto or SPACs or the equity markets. Where's that money gone? It's sitting in people's bank accounts, earning negative returns given the 8% inflation rate for sure. Institutions, I mentioned this already, they're still buying. Zillow stopped. Zillow was a huge buyer of homes. I'm sure you read about that. They had a little indigestion. They lost $3 billion in that endeavor while overpaying for a lot of homes, mostly in Phoenix. They were the biggest buyers in Phoenix, for sure. This again just shows about the differential in housing prices between, what we call affordability, right? How much are you paying on a monthly mortgage payment, and how much are you paying in rent? Right now, actually, it's a fairly wide spread, as you can see. So what's happened, of course, is people ask me what's going to happen with residential housing. Obviously, housing prices they're already falling. They're already softening. I think housing prices are going to fall 5 to 10%, in my opinion. But if you're expecting a crash, forget about it. Ain't going to happen. Too little supply, too much money out there, and Wall Street still has cash. So the prices aren't going to be coming down, which means affordability is an issue. It actually means rents are going up too. So again, that problem John Oliver's talked about, that everyone in this room understands as a reality, that ain't going away. All right, rents are going to be going higher. For those of you who are landlords, again, that's great. Again, but it's a real societal problem. It is a big problem, and we have to deal with it for sure. I can give you more data on housing affordability up the kazoo. Again, I'll tell you one anecdote. Two of my good friends who live in Seattle, I was at a nice restaurant with them, and I asked them, I said, where does the bus person, the bus boy, where does he live? And they look at me, what do you mean? Why are you asking? Why do you care? I said, that's the problem. You don't care. That person busting your table needs to live within a reasonable proximity of their job. And you're not even paying attention because you're an MBA and you have money, so you don't think about it, okay? But that is the issue. We need the wage gap. Okay, another trivia for you. If you look at the ratio of public company CEOs and their compensation as compared to the average worker of those same companies, anyone know the ratio? It's a joke. Joke is the right answer. I was looking for a number.
It's like 357.
I got 350 times. Right. That is not just a joke, that's a that is, again, not sustainable. Look, I'm a business school professor. I get capitalism. I do. And obviously, I live it. But I tell my students we have to have compassionate capitalism. We have failed. We have absolutely failed in compassionate capitalism. There's no way that is tenable, sustainable, or good for our country. Okay? The middle class, which really built America, we've got to get that back. And the only way is, I know a lot of my colleagues are not happy with me and disagree with me, but I think we have to reallocate in some way that wealth into a broader base. All right, so it's a real issue for sure. I again, give you graphs up the kazoo on this for sure. How are we doing time-wise?
We've got about 20 minutes.
Okay, good. I mentioned this already. So this is from April. The data down 8.6% in May. We'll see what June's CPI, again, Consumer Price Index looks like, but you all know. Someone had a meme the other day. It had a 7-Eleven gas station, and guess what the price was? 7-Eleven. Okay. Yeah, exactly. I mean, aren't you clever? Yeah, okay, exactly. Let me file bankruptcy while I fill up my tank. Right. I mean, and you know what? We're laughing because it's maybe that's the only relief we have, but it is, of course, a serious issue for sure. Look, you know that. Gas prices, natural gas, again, Russia, Ukraine obviously exacerbated the realities of what was already happening. The one thing I will tell you about oil and gas prices, if you're curious, is cannot be predicted. cannot be predicted. I attended a lecture from UCLA's top oil policy professor, faculty member, and I remember what he said. He said they've studied it and no one can predict oil prices. It's too many factors. So, look at the graph here. It seems to be true for sure. Thank God for Costco. For $1.50, you can still get a hot dog and a drink. When I get bummed about inflation, I go to Costco. What inflation? That rotisserie chicken is still $4.99. Now you all can any of you figure that out? How can they sell a whole damn chicken for $4.99 and I go down there and it's 15 bucks a pound how do they do that? Maybe I should just go out in front and sell anyway, so thank God for Costco for sure. All right, a few other trivia points I'll give you. Again, I mentioned demographics. I've become sort of an amateur demographer, that's the right word. I told you a few things that are happening that are really important for us all to think about. I mentioned domestic migration away from the coasts, from California and from New York, and I think you all know that's happening. Fertility rate is down substantially. In fact, across the developed countries, people are getting married later, having fewer children, and that is and given our ridiculously crappy immigration policy, because both parties would rather talk to a microphone and criticize the other instead of actually coming up with reasonable and good immigration policy. I'm telling you right now, if they don't get that right, we are at close to peak population in the United States. Because I look at my 3 kids, and it's true. I'm almost sure I don't know how many kids they're going to have, but they're going to be late. I know I'm not sure they're ever going to get married and how many kids they're going to have, but they're like all these 20-somethings. They're getting married late and they're not having kids, which is problematic for the growth of the country. All right, so we got to get immigration fixed for sure. And this talks about the fertility rates. By the way, so that's the USA. I mean, we are close to the bottom. Just again, what we don't want to become, and I'm not saying this to be critical, is you look at Japan. And I don't know if for any of you who are familiar with Japan. Japan's economy, last 30 years, terrible. Why? One word, demographics. Very old population. In fact, population declining in Japan. The population in Japan is actually declining. And you look at their GDP, just tanking as a result. So we need to get that fixed for sure. Where are people going? I mentioned Sun Belt in the Southwest. If you're looking at investing, you're here for different reasons, and thinking about, again, sustainability and the realities of housing affordability in some level. People are going to suburbs of suburbs. We call them exurbs, places like Colorado Springs, or places like that, which are kind of suburbs of Denver, let's just say, which is a secondary market. COVID, obviously remote work, some of you may be interested in that, is definitely having an impact for sure on that, as are other demographic change for sure. As far as commercial real estate, for those who are interested in, again, that would be industrial, that'd be office, retail, and so forth. So a lot of the same factors. And then there's some others on here as you look at this list. The one what do you think of this list? Which one gets all of my students interested more than any other? Sativa or indica, Professor Sussman? There's no question that is true. There's no question legalization of marijuana has had an impact on the real estate market here. There's no question, certainly industrial markets for sure. But other things, of course, are relevant. Of course, telecommuting, remote work. I don't know what you all think. I get asked this question. I got asked it today during class, is the future of remote work. I am not sure still, because I think by and large employers don't want to hire the best and brightest, let's say UCLA Anderson students and people like Matt Weinfield, and then have them work at home in their Lululemons or their Vuaris, okay? Which are comfortable, but tough business problems, the stuff that you're dealing with, the stuff that you all are dealing with, right? Collaboration, teamwork, and we all know Zoom is just a mess for that. It just doesn't work. So I think a lot of employers are going to demand, and really, because they want that to happen with collaboration. And then the question is, how do employees respond? I heard Google is requiring it, and a lot of people gave notice. They're like, I don't want to go back to work. I'm enjoying these Vuaris. They are soft. My God. Wow. I think there'll be some jobs that are permanently distance, some will be hybrid, but most will go back to work full time. The only question is when that all happens for sure. This is not working. What happened here? Okay, well, I'm always done with my slides. Okay. Public policy. I mentioned some of these. You may all be familiar with some of these efforts in again, not just California at the state level, but locally, what's happening. You just kind of read through the list. California is tough. Obviously, we've got, Coastal Commission. We've got, of course, other challenges, Prop 13, which is anachronistic, frankly, and other issues. So it's just an issue of how the politicians deal with this housing affordability issue. They don't seem equipped to do it. I will just tell you one thing, is that rent control is spreading. John Oliver predicted, and he's right about that. So even your purple and red states, I told you rent control is coming, and you can look at some of the places where that's happening. Minnesota has some rent control, places in Colorado, and even Florida. Oh my gosh, Florida. So we'll have to see how that happens. I really try to take a middle ground here. I think policy is so important, but politicians basically are vying for elections and they're not really vested in long-term solutions because they're going to be out of office. That's the fundamental problem, and I think you all can appreciate that very well. All right, markets are fickle things. I told you, don't try to time them. Okay, you know who that buffoon is on the right? All right, he makes more money than anyone. But anyways, Kramer, booyah, he pushes a button and then stocks go up or down. Just, if you want, this meme captures Kramer perfectly. These companies that are listed on the screen there, people don't care what they make. People don't care what the price is. They're just buying them. On average, you want to guess those stocks listed on that screen from Netflix to the rest are down? 80% on average, okay, since he did that. So when Kramer says buy, what do you do? That's right, get the hell out, then you sell. All right, for sure. And over here is Phoenix, just data, it's hard to read, but what I said about Phoenix, I mean, just, look, you go back, and for those who remember, 2007, 8, 9, the financial crisis, in Phoenix, every street had foreclosures. They couldn't give housing away just 15 years ago. Just think about that again, and we've all just forgotten. And now it's been hot as hot can be. So just markets are fickle things, sentiment is fickle, don't try to time. All right, so look, this is gonna be a tough year, there's no question, but again, just keep perspective. We had 10 years, just again, give you some other historical perspective. The last decade was the best decade for economic growth in the history of the country. We had the longest period without a recession ever. We had the lowest unemployment rate for 50 years before COVID hit, all right? So look, we've got to get through this mess, and I have every confidence that we will. It's just, of course, the media, if it bleeds, it leads. And so they're right. They love to sort of get us all worked up. But the reality is just keep calm. That's my best advice for you, for sure. And that's including housing. Housing is, to me, the biggest issue in the country. I do think we need a complete overhaul of zoning. I think we do have to sort of deal with make some changes. And I think Section 8 should be expanded. I think we should make housing an entitlement, and I think that will change our and also deal with the homeless issue for sure. And maybe we have to be more realistic as well. I do think private-public partnerships are necessary. Have any of you heard of, by chance, it just occurred to me, Flyaway Homes? Anyone heard of it? They built it was a homeless project with using shipping containers. Mm. Like the K line, you know what I'm talking about? Very creative, and they approached me actually. Again, I'm in the middle of a lot of things, and they had an interesting thing. They said, we're going to do a master lease with the city. You're not going to make any money, okay? But you're not going to lose money. So it's sort of attracting, sort of investors to invest in housing projects, basically to do a public good. Maybe you'll make a little return on your money. And I think that got me thinking, if we can do something like that, that may have some legs to it as well, some food for thought. So, this is just if you, I do a podcast if you want to listen. Anyways, that's what I want to say to y'all. I don't know if any questions, comments, clarifications, questions on life, relationships, John Oliver, USC's football team, UCLA's basketball team. Anything else? What is on your mind?
John? So, Eric.
John or anyone? Yeah, fire away.
So this conference is a brownfields conference. Yep. So almost everybody in this room works in remediating contaminated land, which then by definition is expensive real estate, and it's legacy contamination, typically in urban areas, maybe out in rural areas. So given all of the factors in the economy with with inflation and the housing market, and where you've got a real estate industry, kind of a sub-industry, trying to do the right thing. What do you say? How do you keep the faith?
Well, okay. Look, by the way, I know this is a Brownfields conference. I know that Matt comes and guest speaks in my class, actually. Obviously, I was here talking more generally about the real estate market for all of you. Look, I'll tell you a funny story about that, John. I testified as an expert witness in a case just this week involving Boeing and a real estate developer out in the valley who, again, because it was a contaminated site, brownfield site, TCE on the site, and of course, some litigation ensued. The problem with, in the case of housing, of course, is everything from vapor barriers and the risk, the fear. It's not even the cost.
Mm-hmm.
I mean, that is an issue, but I think it's the fear of litigation.
Yeah.
There's so much fear. Even Boeing was very fearful in terms of cleaning up because they knew that they were going to be building housing. Look, I'm not here making any statements other than you think about it was just relevant because I don't know if you saw the Supreme Court denied Bear tried to keep the Roundup cases from going. I don't know if you saw that story. So Bear has set aside $16 billion for litigation involving Roundup. So you can imagine a company like Boeing who has this big piece of land in the valley and they want to build 600 units. Okay, that's what the developer wants to build, that'd be a meaningful add to the housing stock of Warner Center. And Boeing wants all kinds of protections, indemnifications, because they're afraid of litigation. If someone gets sick in the unit and says it's because there was chemicals here and the vapor barriers didn't function properly or something like that. So I think the brownfields for housing, I think is tricky. At least that's my sense, unless we do something with the plaintiff's bar, I think, as much as anything else.
Okay. And then on the supply chain, I have one little supply chain story. We were complaining about the screen, and I work for the city of Carson, and I texted our IT guy, and he just texted back during your talk and said, well, we were supposed to have a new projector, but it's on the boat. And it should be here in about a month.
Yeah.
So that's what the vendor said. So that's our supply chain. But supply chain as a factor in inflation, supply chain, you talked about the Great Resignation, COVID, all sorts of other factors. I mean, it seems like everybody has an explanation for why we have inflation, and people forget, or maybe don't realize, it's global. And it seems like often the explanation lands on it was a stimulus and put too much money in people's pockets, or conversely, it's just corporate greed, right? And so, it's got to be somewhere in between. Is that correct?
Right. Look, the biggest cause of inflation is the government largesse. I'll give you some data. The Federal Reserve's balance sheet today stands at between $9 and $10 trillion. Okay, so our Federal Reserve has between $9 and $10 trillion of assets. If you go back before COVID, it was less than half of that. So and again, a lot of you, I'm sure a lot of us, whether it was PPP loans or other things, they just really printed so much money. One thing, John, I'll tell you about is, y'all heard of Trickle-Down Economics? Mm-hmm. Okay, yeah, that is the most ridiculously absurd economic theory there is. That is, if you just give people money, it's going to trickle down to the middle and lower class. That's what we call bullshit. Why? Because in COVID, when you gave a lot of people who didn't need the money, what do they do with it? They hire more people? Well, they invested it. They bought real estate. They bought equities. They bought meme stocks. They bought cryptocurrencies. Okay, that's where the money went, and that inflated everything. Look, I sit there and tell my wife, when we bought the home we live in now in 1997, and I sit there and I look at the price of what's happened, and thank God we bought in 1997 because we couldn't really buy the house today. Okay, 25 years later, even what's happened professionally. And I sit there and say, just step back. It's ridiculous. How? Because they basically inflated money so significantly. They artificially lowered rates. So those rates were ridiculously low, too low, actually, in my opinion. and that incented extra buying. And then, of course, John, yes, you then add onto that COVID, supply chain disruptions, geopolitical issues, and you've got if I had an easy bake oven recipe for recession or inflation, we've got a lot of factors that hit the recipe. And that's the question. And just one last thing I'll say is, look, the Fed targets 2%. That's what the Federal Reserve wants, a 2% inflation rate. That ain't happening anytime soon, okay? That's one thing I can tell you. So I don't know when inflation is going to subside, and the Fed's going to be doing the Volcker thing, but 2% is a pipe dream for at least, I'd say, 6 quarters.
So I know you don't like to do predictions, so we're gonna hold to 6 quarters. If anybody has any questions, you can come to the mic, and I'm going to ask
anything at all. Cryptocurrencies, demographics.
I want to ask about this. You had a slide at the end on the shared economy, and that's sort of another factor. Airbnb, we talked about.
Oh, short-term rentals.
We talked about it.
Yeah.
Corporate investing in property. Obviously, Airbnb is not Airbnb investing in property. It's a buyer. But in certain markets, certainly in resort markets,
yes,
it's had a tremendous impact, right? Would you say on affordability housing and really even the availability of housing for rental?
Actually, that was my error. I should have mentioned Airbnb. It's on one of my slides. Short-term rentals, because that does deserve more talk. I don't know, John, you're absolutely right. That is one thing, the short-term rental markets, especially in resort markets, that has a very material effect on housing. So you take, I'm big on anecdotes. I pay very close attention everywhere I go on economic factors. I was in Big Bear last weekend. I don't know if you've been up to the mountains lately. But I went, there's a pizza place in town, and I said, are you doing takeout? They said, no. I said, you're not, a pizza place not doing takeout? I mean, my God, what's happening? I said, what? She said, labor issues. Our kitchen is short-staffed. I went down the street to another place, and they were closed because they couldn't staff the restaurant. It's the same issue I mentioned out earlier.
Yeah.
Now, Airbnb, because Big Bear, something like 20,000 units has been taken off the market and is now doing short-term rentals up there. That is a problem. So then you say, go to public policy. We need to regulate it, okay? All right, so now, of course, in most places now at 30-day minimums. One that's pending is San Diego. Any of my friends here from San Diego? So San Diego is now, like in Pacific Beach and down in those beach communities, is actually regulating. It was supposed to go into effect in October. It's going to be next year. So you're right, John, they are going to regulate that. Again, that's where I always have these mixed emotions. I'm not a big fan of regulations, but I think they do need to do it. They need to, and because that is housing stock that's taken out of the local renters and given to short-term vacationers, and I think that's a problem. Unlike, by the way, the institutions buying the homes. That to me, because they're renting them to families. So I'm not as. That's one where I think we have a more problematic issue.
Yeah, there's a project I worked on in Palm Springs a long time ago that. A new phase coming in, they want to do the build to rent. And so the homeowners in the other phases are complaining about that. But your point is they're building it, people are going to live in it. It's probably better than short-term rentals.
Yes, so to me, as long as you're renting to families, as on our long-term leases, I'm okay. I'm okay with that. I don't have as much a problem with the short-term rentals is definitely an issue in certain areas.
Yeah. All right. Ignacio?
So you mentioned Prop 13. What is your beef with Prop 13?
Said the homeowner who's had their house for a long time and pays very low property taxes.
He loves it.
Right? Here's the thing, Ignacio. It is true. Those of you remember, again, Prop 13 is great. For those of us who are owned our houses for a long time, it's a wonderful thing. But like, take my parents, Ignacio. So my parents, I'm grateful. My dad is 90, my mom is 84. They live in the same house I grew up in Studio City that they bought in 1960, whatever, for, I think 3 staplers and a rubber band. And, I asked my dad, I said, Dad, and he's not moving because he doesn't want to pay the taxes. He's, it's an issue as you get older. I said, Dad, how much do you think your house is worth now? He goes, Studio City. He said, we're probably $2 million. Oh my God, $2 million, right? And he's paying in taxes on basically the $50,000 base. The thing is For one thing, Prop 13 includes every property, commercial and residential. We clearly should have split roles. That was the argument behind Prop, was it 19? That failed. I think it was Prop 19, the ballot. They were trying to split roll. Commercial properties get assessed, and residential properties can kind of be, forgive me, grandfathered. I think that's one problem, Ignacio. We should segregate commercial from residential. And then the other thing is, I don't know if it should be income-based, but I'm a little troubled that people in Beverly Hills that have lived in their houses for a long time are playing somewhere between jack and squat on property taxes. That's maybe the left side of me, that visceral part. I'm not saying I know exactly how to deal with that, Ignacio, but I find that problematic. I can tell you, Ignacio, there isn't a single state in the country that has our same property tax regime we do. California is unique in that regard. So, I'm not saying anything's perfect, but I do think commercial property owners should pay more taxes. Okay? That's my view. Yeah.
Hi. What's the role of environmental regulation on the real estate, residential and commercial real estate development?
So I didn't hear the first part.
The fiscal impact of environmental regulation on redevelopment.
Fiscal impact of environmental regulation. I'm not sure who's quantified that. So I don't want to just speak off the cuff with a figure there. Look, I think most environmental regulations seem, even from what I can tell as a business school prof and someone who plays in the market, seems to be reasonable. I mean, I think, look, I've dealt with the water board many times. I've dealt with various regulatory agencies, and by and large, I found them. In fact, I had a fire at a piece of property, and the hazardous unit of the fire department came, and I found them very reasonable to deal with. I didn't have a problem with it. So I don't know if there's any impact. Look, the fact is, in California, we've got a lot of contaminated sites, a lot of brownfield. We have manufacturing, and of course, you all know there was no oversight for so many decades, and so we have to clean up these sites. Maybe in some cases we err on over-regulation, but I haven't read any papers that really have focused on that as being problematic, at least not in my MBA world at UCLA. I haven't seen any.
I was referring to the CEQA regulation where you have the ability.
Oh, okay, you're talking CEQA. Okay. Well, now you're, okay. All right, so California Environmental Quality Act. Oh boy. I want to be careful. Look, that's one where I think it went past. Same with the Coastal Commission. Look, I'm kind of a centrist politically. I try to see both sides. Maybe it's just as a teacher, I have to be kind of that way. I think I try. CEQA to me has grown beyond what it was intentionally meant to do. And basically, look, you're basically giving judges who are going to rule on everything from whether this species is an issue, whether shadows and light and traffic. And it's very easy as a matter of just getting a consultant to file a report saying, hey, this is a problem. And of course, as a judge, what are you to do? So I think it's been used as a weapon, unfortunately, to sort of prevent, as an impediment to some projects that should get built. And we need housing. So the problem is we can moan about it, but it ain't going nowhere. Same with Prop 13. You need 2/3 vote, okay? We're a ballot state. So things like Coastal Commission, CEQA, Prop 13 are here to stay, in my opinion, because we can't make changes. And so that's a fundamental issue. Yeah, CEQA is, I think, in its spirit is correct, and we need to have good oversight, but I think it's been weaponized. It's basically been weaponized. And that's the word I'd use.
One last question. So I've got a question if nobody else does, but so my last question is on commercial real estate, two other asset classes, retail and office. We talked about Amazon and industrial's on fire. Is retail dead?
No.
Okay. And office, you said people are coming back.
Correct. So what's that famous Mark Twain quote that the rumors of
Retail's,
my demise have been greatly exaggerated? Same with retail. Look, if you look at the retail market, something like 85% of transactions, well, at least before COVID. COVID definitely was a shift, but 85% of transactions are still done in brick and mortar stores. So people still like to shop and still want to go, squeeze the Charmin. Mr. Whipple, you remember? My hero. So I think that's exaggeration. Look, retail is going to have to be repurposed. A lot of retail is going to have to be repurposed, whether in a lot of different ways. I think actually senior housing in shopping malls, I think would be a perfect combination. If the local zoning folks will let that happen, I think the empty mall space, the empty Sears and J.C. Penney's around the country, whether they're ambulatory outpatient centers or housing. But retail's not dead, and office isn't dead either. By the way, if you look at the pricing, same thing. Prices, yes, they're down, but not as much as you'd think. There's still a lot of money sloshing around, and we do have some overbuilding. Office downtown LA now, vacancy is probably about 20%. Downtown Los Angeles now, so it's a little high. But it's too early to call the death, I think, John, for sure.
That's great. Well, with that, I thank you, and
Now you.